watching Business Today Television. I'm Sakshi Batra and this is a special show on budget stocks. Remember that we've been running this series all of last 2 weeks, and this is to really understand how should investors be really approaching the markets right ahead of the budget, which are the key sectors and the themes that may find favor with the upcoming union budget and may see a lot of announcements and therefore present an opportunity for investors to tap on some of the stocks and sectors within their portfolios right here. Joining in on this very special edition today is Mr. Ambareesh Baliga, well-known market expert, and you've seen him a number of times on our channel. Warm welcome to you, sir, and thank you so much for taking the time out. We also have my colleague Asim now joining in to share with us first up what are the key expectations that we can build from the upcoming budget with respect to defense and the shipping space, and then we'll come to Ambareesh sir to really understand what is the expert take on that. Asim, take it away first.
Thanks, Sakshi. So the defense budget has seen a steady increase over the last 4 years. The budget allocation for the defense sector in the fiscal year 2023-24 was approximately rupees 5.94 lakh crore, up from rupees 4.78 lakh crore in 2020-21. And Rajnath Singh, the Minister of Defense, has set a target of rupees 50,000 crore worth of defense exports in the next 5 years. So that's a very ambitious target. Last year, we achieved defense exports of record rupees 21,083 crore. So there are some demands by the defense bodies for this defense budget. So some of them are: Rajendra Bhatia, President of Society of Indian Defense Manufacturers, has called for establishing a framework for government-to-government sales, a dedicated defense exports desk within the Exim Bank, and lines of credit to boost exports. On the production front, Bhatia called for the acceleration of strategic partnerships and the launch of programs such as P-75 submarine project. Neeraj Gupta, Managing Director of MKU Group, has suggested that India could further enhance its defense exports by leveraging defense diplomacy and engaging in government-to-government and government-to-business interactions with friendly nations. He also highlighted the potential of defense lines of credit to reach non-traditional markets and enhance geopolitical ties. Jayant Patil, member of Executive Committee of Management, Larsen and Toubro, said increased budgetary allocation for capital acquisition is necessary, along with taking the overall defense budget allocation closer to 2% of the gross domestic product. Back to you, Sakshi.
Right, thanks a lot, Asim, for sharing that update with us as far as the defense expectations right there. Let's take it across to our expert of the day, Ambareesh sir, to really understand, what can be the big bang expectations. Ambareesh sir, do you also see that the focus that the government has had up till now within the defense space will see an increase in the capital outlay and the allocation as far as the defense sector is concerned, and how much is really needed? Because even if we see the kind of expenditure that the government does to defense, that still is far below the 2% mark, even when you compare it to the GDP. So how do you really see the government really stepping the pedal on this?
See, if you see the last 50 years, look at the defense budget. The defense budget has never come down, and it can never come down going ahead also. So, clearly defense budgets will keep moving up. But what we have seen in the last, especially 4 to 5 years, is that there is more focus of the government on domestic manufacturing capability as far as defense is concerned. Yes. And that's what actually has played out in the market over the last, especially the last 2 years, because it was a discovery. And whenever there is a discovery, as far as a specific sector is concerned, which was ignored by the markets for a long time, whenever there is discovery, you normally see the stocks becoming like multi-baggers. And what we have seen, especially in the last 1 year, I think quite a few of them have become 8-baggers and 10-baggers. Now the question is, are these sort of valuations sustainable or not? I find it a bit difficult to really justify stocks quoting at about 20x revenues. Here we are not talking of startups, we are talking of listed entities. And that too PSU defense stocks quoting at 20x revenues, 10 to 15x revenues, some of them. If you look at the P, it's close to about 100, some of them are slightly more than that. And why has it gone up? One, clearly because of the focus of the government, and number two, the sort of order flows which have been there. But order flows have been discounted by the markets, because that figure is known. But then some of them have orders for the next 7 years, 10 years. So, I mean, can they take much more orders? I mean, the same sort of order flow which you've seen the last few years, can that still go? I mean, like, can they take it going ahead? Because I don't think anyone will place an order to get their defense parts in the next 15 years. They would want it in the next, at least the foreseeable 4 5 years. And for that, each one of them has to spend on capex and increase the capacity. And that itself is not enough. You require, skilled labor to manufacture. So, I mean, there are issues as far as execution is concerned. So that I don't think the market is discounting as of now. So I would be a bit skeptical. I would be extremely cautious in buying more into defense right now. What I would be saying is possibly if you have defense stocks, take out your capital and take out some profits, because if it's a 10 bagger, you have enough profits on hand. Take out some profits and let the profits play on.
Yeah.
Because from here on, at least till the budget, or maybe slightly beyond budget, it would be more of the sentiments which could take it up than the fundamentals.
Absolutely, a sentiment-driven rally from here on up till the budget and beyond, but wise enough to take back your capital at least and let the profits be, so that you are safe in case there is any profit booking that takes place after this one-way up move. Within the defense space, now let's cater to the shipping space as well. What do
Right.
you think should be the agenda as far as the government is concerned with respect to shipping? The kind of needs that we have as a country, the kind of interests that we are seeing from big conglomerates like Adani Group, which is now exploring to take an entry within the shipping space as well. How are you looking at over the next 4 5 years the development that could take place within shipping, and keeping that in focus, what should be the government step here?
See, I mean, there's a huge focus on shipping, especially coastal shipping and inland water, transport. I think these are the two big areas where the government is clearly focusing on. And this will clearly lead to increase in orders as far as the smaller ships are concerned. I'm not talking about the large mega ships, but the smaller ones which are concerned. I think there'll be decent amount of order flows as far as this space is concerned. So yes, I think overall positive, but the question is, are the listed entities which are there right now, can they really take many more orders from this sort of a order book size which they have? I mean, it's very much possible that there could be a lot of unlisted smaller players actually getting these orders than the large listed ones.
Okay. So, within the defense space and within the shipping space, the kind of multi-bagger returns that we've already seen, beyond that, you've already said that, what should be the strategy. But do you have a few names within these spaces that may continue to give investors an opportunity off and on to continue to build wealth over the next 4 5 years? Or if somebody has that long-term vision, what should be the strategy right here, and which are the stocks that you believe could be benefiting most from the government's focus this time around in the budget?
See, I mean, in a situation like this, where the valuations have gone through the roof,
Yeah.
then one starts looking at relative valuations. By relative valuations, I mean at least some stocks which are quoting at slightly lower than the overall average
True.
in that sector. And if you see from that point of view, Gardner Reed Shipbuilders seems decently priced, although I would say it is expensive. But looking at the other defense stocks, I think
Yeah.
this looks cheaper. So it is comparatively safe at this point of time. But then, what I would be comfortable with is once there's a decent reaction, I mean, and it's overdue. Reaction is
Yeah.
overdue in this space. When that reaction happens, I think that's the time to buy in. I mean,
Okay.
and basically, whenever a reaction will happen in a space like this, there can be some amount of panic. Utilize that and buy in, because if you're talking of the long-term story, if I'm not even talking of 5 years, even if you're talking of the next 10 years, I think that's the space to be in, no doubt. But then
Okay.
if you buy today at these levels, your waiting period could be much longer. So I would wait for a correction and buy.
wait for a correction and then buy, because there is nothing wrong with the long term story. 5-10 years down the line, this is the sector that could probably give you a lot of wealth creating opportunities, but one should be definitely aware of what is the kind of valuation that these stocks are trading at after this sharp multi-bagger returns that most of these stocks within this space have thrown in as well. The other thing is, as far as defense exports is concerned, what is the kind of, just like how Asim was pointing out, the defense minister has already given a bullish target of 50,000 odd crore rupees till FY29. What are the kind of steps that the government could be looking at within the budget and outside of it as well to now start to boost exports, because exports is still a very small portion of the companies back home in India right now?
No, that's true. I think this is a new space which is actually opening up because the Indian, shipbuilders or defense companies, like we call them, were basically catering more to the Indian defense and to a certain extent for, basically in ship repairs. Going ahead, I mean, we have already seen a decent amount of exports happening, but going ahead, when we talk of third world countries, I think that is where our major exports are going to be. And that's, like I said, it's extremely positive. But again, the issue comes back to execution. We need to see, whether they are able to expand decently well, and at the same time get the skilled people in place to execute the orders. Because getting orders is one thing, execution is something different. And we have seen even large companies like L&T or BHPL actually faltering on execution. So it's very much possible that these companies also can falter. And as and when that faltering happens, that is the time I think the reality will dawn in, and you'll see a major correction.
All boils down to execution of the large orders, on the basis of which we are actually seeing a lot of sentimentally driven rally within this space. Of course, orders is one thing, like Mr. Ambareesh Baliga did point out. Execution will be very key, and probably a reality check will start to happen from the Q1 FY25 results. So coming to the results expectations from within this space, what is the kind of expectation that one should have from the defense space, shipbuilding space this time around in the quarterly results? Or is it just too early for them to show, some kind of positive traction as far as execution, like you pointed out, is concerned here?
No, because see, till some time back, they had the capacity to execute, and because of which, if you see the last couple of quarters, we have seen a decent amount of execution, as well as profitability also increasing quite sharply. Now the question is whether this trend will continue beyond possibly Q2 or Q3 FY25, because that is where I think we'll have that bottleneck coming in. From that point of view, I would be cautious, but I think Q1 should still show a decent up move.
Okay, got that. So, let's also understand from the ancillary makers as well. One are the indigenous big makers like HAL, BEL, BEML we've been looking at. The other part we've discussed is the shipbuilder stocks like Cochin, Mazicon, GRSE. You pointed out GRSE is still relatively better valued than the others at this point in time. How about the ancillary suppliers here when it comes to the space missions that we are going to be focusing on, or the defense, on ground missions as well? Are the ancillary makers to really, focus on? Probably that is a proxy play and a better play because of the valuations that have run up in the frontline stocks, sir?
No, that's true. I mean, if you compare, the ancillary players could be a better play because they are decently diversified. They're just not dependent on one sort of vertical, for the revenues. So I think if you're talking of people like BEL, I think that's really well placed, and one can still look to buy at these levels. Although we are talking of the stock at sort of lifetime highs, but still, I think from here there can be some more upside.
From here there could be some more upside right here. Okay, let's make it absolutely simple now, sir, towards the end of our discussion for all our viewers. In case you could take a few names where you feel that the near-term top is either near or it's already happened, and one should be very, very cautious from here on. And places like you pointed out on GRSE and BEL, where one can still look at a staggered approach if one has a very long-term view. How would you divide these two baskets?
Like, for example, something like a Cochin shipyard, I think it's just too expensive. Same, I would say, for Mazagon. I mean, at these levels, I would surely book profits. To buy, I would possibly look at Garden Reach, which I said, and BEL, Bharat Electronics. The other one, which I'm finding expensive, is HAL. I mean, even that can be booked off to a certain extent at this point.
Got that. Well, thank you so much, Mr. Baliga, for being with us on this show, helping us with various insights, what can be expected in the upcoming budget, but at the same time, understanding valuations fundamentals of the defense space is very, very key right ahead of it. There could be some more move around the budget and even beyond, but then there could be some reality checks, so one should be waiting for that too. Many thanks. Always a pleasure to host you, sir, and seeking your wonderful insights is always welcome from all our viewers. Thank you so much. With that, viewers, this was another special conversation that we had on budget stocks, and we are continuing with this discussion, and over the next week also there will be a continuous discussion as far as budget stocks will be concerned. So stay tuned for this special series that's going to be helping you in case you're looking at a budget related play for your portfolio. And of course, Business Today Television will continue to bring you all the action on the other side.
The Enforcement Directorate launched simultaneous raids at multiple locations, including premises linked to former Karnataka Minister B. Nagendra and Congress MLA Basanna Gowda Daddal. The raids are part of an investigation into